In 2 minutes, I'm going to dissect the biggest mistake that nearly every single person watching this video, including you, is probably making in their trading right now. This mistake is more than likely the reason that you have not reached your potential. You have not reached that main goal of becoming financially free, independent, and a profitable trader. But the good news is this mistake is completely avoidable. And what I'm going to show you in this video is how to avoid this mistake altogether so that you can speed up your process to accomplishing your goals of becoming a professional trader. Later on in the video, I'll also be sharing some technical analysis tips and tricks. I work with tons of traders, and these traders normally come to me through desperation, sadly, where they have tried tons of things in the financial markets and nothing has worked out. What I'm going to show you towards the end of the video, these technical analysis tips and tricks have been some of the only ways that these traders have found to become consistent and to become profitable, because they're rules-based and they do provide an edge over the market. So stick around for all that. If you are new here, go ahead and click that subscribe button and the notification bell to be alerted when we come out with new content each and every week. Click that like button, follow us on Instagram at The Trading Channel, and I'll see you after the intro and disclaimer. Talk soon. Welcome back, and the first part of this video is going to be pretty fast. Explaining the biggest mistake that most traders make is actually a lot more simple than you might think. So let's start like this. There are 3 areas where you can make very large mistakes in your trading that are detrimental to your trading account that you're probably making right now in terms of mistakes, and I'm going to explain how you're going to avoid those. Let's first off draw the triangle of trading success. That's what I like to call this. So here we have our triangle of trading success. In the middle of this triangle, obviously, is where all of the profitable traders reside. These are the profitable traders living in mansions, driving around Bentleys, and spending thousands of dollars on watches. Or maybe they're profitable traders like me. They're driving one semi-nice 2019 Camaro and living in an apartment complex still because they like investing their money in a smart way over buying material objects. Hopefully that's where most of these people are. But anyway, they're inside this circle, and what you have to ask yourself is, how did they get here? So here are the 3 biggest areas where you can make detrimental mistakes to your trading. The first one starts off with strategy. That's pretty obvious. Your strategy / your system, whatever you want to call it, is going to be the first area where you can make detrimental mistakes. You have to have a way of trading that gives you an advantage or an edge over the market. Without it, you're just spinning your wheels. You're going nowhere. You're like a hamster inside of a wheel that's just going over and over and over and over, and you're not moving down the track at all. So without a strategy or a system, you're dead in the water. There's absolutely nothing you can do in terms of improving your trading until you create or find a strategy or a system that provides an edge over the market. Next up, we have risk management. Again, these are the 3 biggest areas you can make a detrimental mistake. Risk management, if you have not heard of this, is the amount of risk you take on any given trade that you place. So right now you may be in a position, again, you're probably making one of these mistakes. If you're watching this video, you're probably in a position where you're trading based on a lot size that Joe Schmo from another YouTube channel told you need to be trading based on if you have a small account. Or you're just trading with you don't even know what risk management plan you're using. You're just trading based on how much money you think you can make. Both of those are huge mistakes that are detrimental to anyone's trading account. If I was doing that, it would be detrimental to my trading account. I have a set in stone risk management plan that we'll discuss in just a second for my own trading. Everyone needs that, no matter how good you are at trading. And lastly is discipline. So these 3 things make up every profitable trader you have ever seen, met, or watched on YouTube or any other trading related outlet. Your strategy or system, and here are the mistakes you may be making. Your strategy or system sucks. It hasn't been validated through historical data. You have no way of knowing whether or not it makes money, and because of that, it possibly doesn't make money. And even if you have a great risk management plan and incredible discipline, you are going to risk management and discipline yourself into an empty trading account because your system doesn't work. That's number 1. That could be the problem. Number 2 is risk management. Again, you could be someone that's just trading blindly in terms of risk management, and placing trades based on how much you can win and not how much you can lose. Our main goal needs to be preserving capital, not trying to make as much as possible. That's not the main goal right now if you're just starting out, or even if you've been trading for a while but you're still struggling to be profitable. Your goal isn't to make as much money as possible. It's to become a profitable trader with very small size because you want to preserve capital. Thirdly, discipline. Maybe you've never tested this strategy in historical data, so you have no way of being confident in the strategy itself. And if you're risking too much money, you're damn sure not going to be disciplined to a strategy that's losing you more money than you're comfortable losing. You have to figure out what your own risk tolerance is and base your risk management plan around that risk tolerance. So for me, risk management wise, I never risk more than 2% on any one given trade. That may be too much for you. That may be too little depending on your risk tolerance, but it's a highly personal decision. Discipline wise, the way I fix that is through backtesting and demo trading strategies before I take them live. In the system that I use, the way I find out and validate that it gives me an edge over the market is by testing it through historical data to see how it's performed in the past. Now, all three of these can create detrimental mistakes, but these are not the biggest mistake that almost every trader watching this video is making right now. Let's talk about that. The biggest mistake that you are making right now is that you are trading too soon. Your biggest mistake very well could be the fact that you are trading well before you are ready. And let me explain what that looks like. If you personally do not have a handle on a strategy or system that gives you a proven edge over the market, and you personally do not have a written risk management plan that is cooperative with your risk tolerance, that makes you comfortable, not uncomfortable. If you lose a trade, are you going to be super fucking upset? If so, you're risking too much money. And if you do not have discipline to this system that gives you an edge over the market and to this risk management plan that makes you comfortable during trades, then you are nowhere near ready to trade. And your biggest mistake that you're making right now is trying to trade with live money before you're ready. I don't know if you can tell, I'm getting really worked up about this because this is the biggest mistake I see traders make every single day. I have traders contact me that are making this mistake, and because of it, they are constantly losing money. I don't want you to lose money. I've been there. I've lost money trading before. It's extremely frustrating. It's painful. And it's something that I don't want anyone to have to go through. So because of that, my best advice to you, if you have watched this video and thought to yourself, wow, that sounds like me, the best advice I can give you is to stop bleeding your account. Stop trading right now. Go back to the drawing board and figure out these three key elements to your trading. Find a system that works. Find a risk management plan that cooperates with your risk tolerance, and find a way to be disciplined to that risk management plan so that you can avoid the biggest mistake that you are more than likely making right now, which is trading too soon. So with that said, guys, I'm going to move on to the technical analysis portion of this. I'm going to share with you some of the technical analysis tricks and tips that I use to give me an edge over the market. These are, in fact, a part of the system, the strategy that give me an edge over the market. So let's take it from the whiteboard over to some charts, and I will see you there. Hope that was helpful. Let's start part 2 of the video. Before we do though, I want you to comment below what your main struggle is in trading based on what you just saw in the first part of this video. Are you having trouble with your system? Are you having trouble with risk management? Is it discipline? Are you in fact trading before you are ready? Comment and let me know so I know what kind of content to produce for you guys in the future. Right now though, let's jump into the technical analysis portion of this. And over the past week or so, we've been discussing a couple of different strategies. These two strategies consist of a double top and bottom strategy and consist of the 5-wick rejection strategy, the video that was posted earlier this week, which has taken off pretty well, a lot of good feedback from that. So that's what we're going to go over again in this video, what we're going to talk about. We're going to add some things to it. I'm also going to discuss what I'm looking for in terms of these two strategies, as in where am I planning to place trades based on these entries in the future. So right now, we're going to review a trade on the euro dollar that I placed today, actually earlier today, that was based on a 5-wick rejection. So before we look for either of those two entries, and if you're not sure what I'm talking about, don't worry, I'm going to go over them again briefly in this video. Also, there'll be a card in the top right hand corner of your screen and a link in the description to both of those videos explaining those entries. Right now though, before I even consider taking either of these entries, I need certain market conditions to be met. What are these market conditions? I need the market to either be in trend against a previous level of structure or counter trend wise against a level of structure that's been tested multiple times. I had a lot of questions last week. What are these green and red boxes on my screen? These are areas of significant structure that I've pointed out that I'm going to be trading around. Right now, I want to show you how I'll point these areas out. So for me, a high time frame is the daily chart because my trades are normally placed on a 4-hour or a 1-hour chart. So with this 1 day time frame, with my higher time frame, what I'm looking for is areas in the market that have been tested multiple times. I don't know how much easier I can really explain that. It's literally an area that's been tested multiple times. So here we have an area that's been tested as support, support, resistance, resistance, support. That's an area that I'm going to be paying attention to for possible trades. At the time of placing this trade, the market was heading down into my green zone, and this green zone is an area I was looking for possible long trades because of this major structure. So if I go down to a 4-hour chart, we'll take a look at this 5-wick rejection here. We get down into this area, and then the market, if you take a look at my dotted horizontal line here, puts in 1, 2, 3, 4, 5, and this long candlestick would be 6. So what I decided to do is enter after that 6th rejection because of the long wick. And with that being the case, I entered the market. As you can see, the market never did go up and actually hit the take profit. So technically, if you were just to not manage the trade at all, this would have been a loss. Luckily for me, this trade got within 5 pips of my take profit. Therefore, I moved my stop to break even and ended up just being stopped out for break even. I'll show you that right here. If I go from the wick of that candle, we're right at 4.8 pips to my target. My rule is if I'm within 5 pips of my target and my trade is over 30 pips, this is right at 30 pips, then I can move my stop loss to break even, which is exactly what I did. So this ended up being a break even trade, but a good example of the 5-wick rejection strategy, which is we're just waiting for an area in the market that is rejected by 5 candlestick wicks. On that 5th wick is what or the close of the candle that produces the 5th wick that gets rejected is going to be the entry, at least for me. This is how I trade this specific strategy. Let's go ahead and move on now. We're going to look at the Aussie dollar. In terms of the Aussie dollar, I want to give you some things I'm looking at in terms of future trading. Right now, on the Aussie dollar, if we go out to the daily chart, you can see that we have an area here. And would you classify this as an area? This is going to be counter trend. We are now trending down on this market. Would you classify this green zone as an area you would like to look for long trades in? The answer for me is an outstanding yes. And the reason for that is because we have an area here that's been tested as support, support, resistance, 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 resistance. It's been tested and reacted from multiple times by this Aussie dollar pair. So with that being the case, my next move, the thing that I'm preparing for with this particular currency pair, is for this pair to come down in my green zone between 0.6822 and 0.6792 and produce an entry. One of the entries that we've talked about over the past 2 weeks. From now on YouTube, those are going to be the 2 entries I use in these zones, at least whenever I do videos like this that aren't tutorial videos, to show you that this is something that can produce an edge over the market. Yes, I have training programs and I have you're capable of seeing my actual full system and strategies that I trade through those training programs, but I don't want someone that can't afford a training program to not have anything to go off of. I was like that for a very long time, and I hated that feeling. I felt like no one was trying to help me, and that's why I produce so much free content here on YouTube, and why I want to try to prove to you that this type of trading can give you an edge and an advantage over the market, because it's absolutely free information. All you have to do is take it and test it through historical data yourself, put in a little bit of work, but the end point after putting in that work can produce a very good trader, which is what I want you to become. So right here, back on the Aussie dollar, waiting on this market to get in my green zone. Once we do, I will either be looking for that 5-wick rejection, an area where the market has 5 different wicks that test that area, and the close of the 5th wick that gets rejected, the close of that candle, is going to be my entry. Or we talked about this last week or the beginning of this week, the double bottom, double top candle color kicker. So in that case, we would be looking for a double bottom here in this green area. And the rules for this double bottom are in the other video, which is there's a card for in the top right-hand corner of your screen. But at the end of this double bottom, there must be a green candle. On the green candle is where I place my entry for this type of trade. Those are the two entries I'll be looking for here on the Aussie dollar in our green zone for the purpose of YouTube. Of course, if you're an EAP member or a member of any of the programs, understand that this is for YouTube only and that they are profitable strategies, but they're a little less advanced than what you're learning in the EAP training program. So that's what we're looking at on the Aussie dollar. Now I want to show you on the Canada Swiss something that happened that was really interesting and pretty awesome if you ask me this week. So last week on this pair, actually on Monday morning on this pair, I released a Pro Trader report, which is another program that we offer. And in the Pro Trader report, I discussed that an area of resistance that we were looking at was between 0.744 and 0.741 here on the Canada Swiss. I'll put a picture of that beside the screen so you can see it. And I will drop down now to a 4-hour chart. And on this 4-hour chart, you can see we really don't have a trade. So let's drop down to an hourly time frame and see what that does. So here on an hourly time frame, we only have a 4-wick test. The awesome part about this is you don't have to restrict yourself just to an hourly time frame. You can even go down further to say a 15-minute chart. And on this 15-minute chart, we got that double top. Here would be our first top. Neckline, the second top. After that second top, we would be waiting for nothing more than a red candle, and at that red candle would be an area to enter on the close of that red candle with a stop loss. We want to make sure our stop loss is always above our zone because this zone is an area we expect the market to fall from. So why would we have a stop loss inside the zone anywhere? Wouldn't make any sense. So as long as the stop loss is above our zone, maybe about 1 ATR or so, then we're good to go. I normally look for around a 1.5 to 1 risk reward. That would have easily been hit here using the same exact skills you've been taught in the past few YouTube videos as a day trading type of strategy, something you can test on your own. So that's pretty cool here on the Canada Swiss. The next thing I'm looking for on this pair, let's see if there's anything I have in mind. We are currently in a little zone of structure support, and we've already bounced out of that, so I'm not looking for anything there. I will be looking right down here in this very large zone for possible trades here on the Canada Swiss because it is the next most recent level of structure. Remember, the two most important things about structure are recency and frequency. Recency and frequency are the two things I pay attention to in terms of whether or not a structure level is going to be important to me. Canada Yen. The Canada Yen came up to a zone. Let's go back to the daily chart. What are we looking for in terms of these zones? This recency, right? What is the most recent level if we are pushing up on the Canada Yen? What is the most recent level of price where the price has been rejected before? It would be right here. And this level also happens to be resistance and support looking left. So this is definitely a level that I wanted to pay attention to for possible trades. Remember, these areas are zones, not exact levels. So even this big red zone isn't set in stone, right? So if I go here to our Canada Yen chart now, you can see that we didn't quite make it to the 84.6 level. I'll also put a screenshot, I may already have put a screenshot up of our Pro Trader report where I was pointing out this area as an area that I was looking for resistance and possible short trades from. But in this area, if we drop down to a 1-hour chart, remember we're talking about the double top with the red candle kicker for a double top and green candle kicker for a double bottom. Right here, we got within 5 pips of our zone and we put in a double top with a red candle kicker. One top, neckline, second top, red candle. That would have been your entry. Your stop loss would have had to go, unfortunately, above this big ass zone. So this would have been a questionable trade to say the least. So we would have to have something like that. 93 pips looking for a 1.5. Probably would not have quite got it yet, and actually would have barely kissed it. Maybe the profit got taken, maybe it didn't. Just an example of another double top red candle kicker around these zones that we're paying attention to for possible trades. Let's move on now. Euro Yen had another 5-wick rejection entry this week. Let's go to the 4-hour chart. Before we do that, we'll go to the daily. On the daily chart, why is this an area, this red area, an area we're paying attention to for possible counter trend shorting opportunities? The reason is recency. It is the most recent level of resistance compared to where price is right now that the market was rejected from. It's also been tested multiple times in the past as support and resistance. Because of that, it's a level we pay attention to for possible trades. How do we trade in these levels? What did we just discuss? 5-wick rejection strategy and double top, red engulf, red kicker, double bottom, green kicker. So with that being the case, let's go to the 4-hour chart. Do we have either of those things here? Yes, we have a 5-candle rejection. We have 1, 2, 3, 4 would be this little candle, and 5 would be this doji right here. With that being the case, and don't be scared to add conditions to this or entries to this. What if you said I need at least 5 wicks to touch an area and then a close below candle? Do you think that would add accuracy to the system, to the strategy? Of course it would. It would get you in less trades probably, but it would add accuracy to the system, which is exactly what you want to be doing. And if that's something you want to add to this, go for it. Go nuts. Have the best time in the world creating your own strategy, which is what this is all about. So in this case, we had 5-wick rejection strategy here. We actually placed this trade. We had I don't remember if I recorded it. I don't think I actually hit record whenever I placed this trade, but we did place it. So here we would have a stop loss above our zone. Target 1.5 is what I like to take on these types of trades. Boom, winning trade. Let's move on to the Aussie yen. I have it green for some reason. I don't think there's anything on it. Instead, we're going to look at the pound Aussie, which just gave a 5-candle rejection. And we'll go over this if this ends up being a winning or a losing trade. I'm going to do a video on just this trade by itself. But this trade in particular ended up giving us our 5-candle rejection. And the way it did that, here was our zone, right? We broke above and closed above this area. Since we broke and closed above it, what's the most recent, remember, recency, area the market broke and closed above? Right here, right? So since we pulled back into that area, it's now an area I'm looking at for possible support that used to be resistance, and it's an area I was looking for a 5-wick rejection from. So in this case, we ended up with 1, 2, 3, 4, and this big candle would be 5 wicks that have rejected this area. I went ahead and placed my trade on a little pullback there, and now we're currently in a live trade up. We're actually down 16 bucks here on the pound Aussie. I'll let you know how that plays out in a separate video coming soon. If you are getting extremely valuable information from this, then I would love it if you would click that like button for me, follow us on Instagram, and click that subscribe button if you are new. And if you enjoyed this content and you're ready to take your trading even further, if you want to know the exact system and strategies that I use, the exact risk management plan, and the exact way I stay disciplined, if you want the answers to all of those questions and also want to receive 3 to 5 of my best trading setups each and every week, along with a full mentorship program where you can contact me at any point that you have questions and I will get back to you as soon as possible, then we would love for you to join us in the EAP Training Program. Join the VIP family. The link for the EAP Training Program is in the description, and right now is the best time for you to do that if you're ready to start improving your trades, because right now I'm offering a $600 discount. It's a scholarship. I'm going to pay $600 towards your lifetime membership in the EAP Training Program. The reason I'm doing this is because I'm tired of seeing traders regret their trades. The scholarship itself is actually called Stop Regretting Trades. This is the Stop Regretting Trades Scholarship, and I would love for you to take part in it in order to join us in the EAP Training Program family. If that's not something you're into, totally fine. Keep it locked here on YouTube as I continue to provide you with some of the world's best free Forex education. I look forward to seeing you next time. I hope you have nothing but green trades. I hope you stay disciplined, keep your risk management in check, and I'll talk to you in the next video. Talk soon.